Welcome to Mr. Trading Lab. Today we are diving into one of the most legendary and misunderstood trading systems ever created. A system so powerful that it turned complete beginners into million-dollar traders. A system that was so simple yet so effective that it shocked the trading world. A system that still works today, and in 2026 can give you an edge over day traders, scalpers, and swing traders who rely purely on signals, indicators, and random strategies. This is the turtle trading method. But today, you're not just going to learn the method. You're going to understand the mindset behind it, the rules that made it successful, the psychology that kept traders consistent, and how you can use it in 2026 to beat both day traders and swing traders who jump in with emotional decisions rather than structured systems. This lesson is not theory. It is not hype. It is not a motivational talk. This is a deep, clear, logical explanation designed for traders who want consistency, structure, and a long-term edge. This is Mr. Trading Lab, where trading is knowledge first, profits next. Let's begin. Chapter 1. The Origin of the Turtle Method, Why This System Was a Revolution. Back in the 1980s, two famous traders had an argument. One believed successful traders were born. The other believed traders could be trained. To settle the argument, they conducted an experiment. They took a group of complete beginners, taught them a very specific system, and let them trade real money. These students were called the Turtles. And the results shocked the world. The Turtles made millions. Their performance proved something massive. Trading success comes from rules, not from talent. Trading success comes from discipline, not from prediction. Trading success comes from following a tested system, not from emotions. This is the core of the turtle trading method. But before we talk about the rules, you need to understand one thing. The turtle method was built to beat all emotional traders. And in 2026, emotional traders are everywhere. They scalp with fear. They swing trade with greed. They trade news like gamblers. They enter trades without structure. They exit trades without logic. The turtle method gives you something they don't have: predictability, consistency, risk control, clear entries, clear exits, no emotional confusion. This is why the turtle method is still a powerful weapon in 2026. Chapter 2. What exactly is the turtle trading method? The turtle method is a trend-following system. But unlike most trend strategies, it uses strict mechanical rules. There are no guesses, no opinions, no instincts, no predictions, just rules. The core idea is simple. When price breaks a high beyond a certain number of days, enter long. When price breaks a low beyond a certain number of days, enter short. But why does this work? Because big trends start with breakouts. Because institutions create momentum through breakouts. Because every major move in history began the same way. The turtle method doesn't try to catch tops or bottoms. It catches expansions. It catches volatility bursts. It catches market cycles. This is how the turtles beat emotional traders. They simply followed what the market was doing, instead of guessing what the market might do. Chapter 3. Why the turtle method still works in 2026. You may wonder why a system from the 1980s still works today. The answer is simple. Human behavior hasn't changed. Institutional behavior hasn't changed. Breakouts still control the market. Trends still form the same way. Fear and greed still create momentum. But today, there is something even more important. Modern traders are more emotional than ever. They want quick wins. They want fast profits. They scalp with panic. They overtrade. They violate rules. They blow accounts. The turtle method is the opposite. It is slow. It is patient. It is emotionless. It is mechanical. In 2026, the trader with structure wins. The trader with rules wins. The trader who avoids noise wins. That is why the turtle method is not outdated. It is more relevant than ever. Chapter 4. The first system, the 20-day breakout strategy. The original turtles used two systems. Let's begin with the first, the 20-day breakout. The rules are simple. If price breaks above the highest high of the past 20 days, right arrow buy. If price breaks below the lowest low of the past 20 days, right arrow sell. This sounds almost too simple. But simple does not mean weak. Simple means disciplined. Simple means clean. Simple means no confusion. Why 20 days? Because 20 days represent a significant short-term market cycle. A breakout above that range signals institutional interest. A breakout below signals institutional pressure. Traders lose because they try to predict. The turtles made money because they waited for confirmation. This is the mindset difference. Chapter 5. The second system, the 55-day breakout strategy. This one is the power move. The 55-day breakout catches the biggest trends of the year. This is perfect for 2026, where long expansions in indices, gold, and currencies occur due to monetary cycles, inflation cycles, and geopolitical shifts. The rule: if price breaks above the highest high of the past 55 days, right arrow buy. If price breaks below the lowest low of the past 55 days, right arrow sell. This strategy creates a long-term edge. It catches huge trend movements. It ignores all the noise. Day traders get lost in noise. Swing traders get confused by short-term reversals. But the turtle method follows the bigger cycle. This is why it outperforms emotional traders. Chapter 6. The most important part, position sizing and risk. This is where most traders fail. The turtles succeeded because they controlled risk better than anyone. The turtle method uses a fixed fraction of capital, volatility-based position sizing, a clear risk per trade. The turtles did not risk random amounts. They did not increase risk emotionally. They did not revenge trade. They risked a fixed amount per trade based on volatility using a unit system. This created consistency. This created stability. This created long-term survival. You cannot beat emotional traders unless you manage risk better than them. Chapter 7. The famous N value, the turtle way of measuring volatility. This is one of the most brilliant parts of the system. The N value measures average true range, ATR, of the market. But unlike today's indicators, the turtle method doesn't use ATR exactly. It uses a modified ATR to decide how big your position should be, where your stop should be, when to add positions. This makes the system adaptive. When the market is quiet, your positions are larger. When the market is wild, your positions are smaller. This keeps you safe. This keeps you steady. This keeps you consistent. Emotional traders do the opposite. They increase size when the market is wild. They panic. They blow accounts. The turtles used volatility, not emotions. Chapter 8. The turtle stop-loss system. The turtles used a simple rule. Place your stop 2 N away from your entry. N is volatility. 2N is safety. This prevents random noise from stopping you out. This prevents emotional exits. This lets you stay in trends longer. This is how the turtles caught massive moves. They didn't exit early. They didn't panic. They followed math. Chapter 9. Pyramiding, the turtle method to grow profits fast. This is one of the most powerful techniques in trading, yet most traders misuse it. The turtle method teaches when to add to winning trades. You don't add because of greed. You add because the trend is proving your direction. Pyramiding rules. Add positions only when price moves 0.5 in your favor. Never add too many units. Always keep total risk controlled. This helps you grow profits faster. Ride big trends. Beat swing traders. Beat day traders. Because while emotional traders close positions early, turtle traders build their positions logically. Chapter 10. The psychology behind the turtle method. This system is not just technical. It is deeply psychological. The turtle method destroys fear, greed, overthinking, overtrading, revenge trading, doubt, because the system makes decisions for you. You do not need to guess. You simply follow rules. This gives you mental clarity. And mental clarity is the real edge in trading. Most traders lose not because of charts, but because of uncontrolled emotions. The turtles removed emotions. You can too. Chapter 11. How to use the turtle method in 2026. Markets in 2026 are fast. AI trading is strong. News volatility is extreme. Retail traders jump in and out all day. But the turtle method is built for volatility. It thrives in chaotic markets. To use the method in 2026. Trade higher timeframes. Use breakout rules cleanly. Follow volatility-based sizing. Avoid emotional decisions. Let profit run. Cut losses early. Trust the system. The turtle method rewards discipline. And discipline is rare in modern traders. That is why this method still beats most traders. Chapter 12. A clear whiteboard example, NAS 100 breakout. Let's take a clean example. Imagine NAS 100 forms a 20-day range. Price suddenly breaks above the 20-day high. A day trader looks at this and thinks, it's overbought. It will reverse. Let me scalp a quick sell. They take the wrong side emotionally. But the turtle trader waits. Price closes above the 20-day high. They enter long. Stop is placed 2 in below. The trend expands. Momentum increases. Institutions push price higher. Day traders get stopped out. Swing traders get confused. Turtle traders ride the trend. This is how you beat emotional traders. You follow structure, not opinion. Chapter 13. The 4 types of traders the turtle method beats. The turtle method crushes. Scalpers who chase entries. Day traders who exit too early. Swing traders who fear holding. Indicator traders who confuse themselves. The reason is simple. The turtle method uses the market's truth, not traders' opinions. You cannot beat the market with emotions. But you can beat emotional traders with rules. Chapter 14. Why most modern traders cannot follow the system. Here is the hidden truth. Most traders today cannot handle holding positions, using wide stop losses, following rules without question, letting profits grow, ignoring noise. They want fast money. They want shortcuts. They want excitement. Turtle trading is the opposite. It is slow. It is boring. It is structural. But boring trading is profitable trading. Exciting trading is destructive trading. This is exactly why the turtle method still outperforms emotional traders in 2026. Chapter 15. The biggest secret: you don't need to trade every day. The turtles did not trade daily. They waited for signals. They avoided noise. They avoided emotional trades. They avoided boredom trades. Waiting is a skill. Patience is a skill. Silence is a skill. If you want to beat day traders and swing traders in 2026, you must accept that. Doing nothing is a trading decision. Waiting is a trading skill. Patience is a trading edge. Most traders lose because they want action. Turtle traders win because they want accuracy. Chapter 16. The 2026 adaptation: how to make it even better. The original turtle system was built for commodities and futures. But in 2026, you can apply it to gold, NAS 100, US 30, S&P 500, crypto, Forex pairs. Just adapt timeframes and volatility calculations. Use. Daily chart for major breakouts. 4H for intermediate setups. 1H only for confirmation. Avoid lower timeframes. They create noise. The turtle method is built for clarity, not noise. Chapter 17. The Survival Advantage, Why This Method Protects Your Account. Most traders blow accounts because they risk too much. They overtrade. They get emotional. They revenge trade. They do not use rules. The turtle method eliminates all these problems. It protects your capital. It gives structure. It gives calmness. It gives long-term survival. A trader who survives becomes a trader who wins. Chapter 18. Preparing for the Future Market CYCLES of 2026. 2026 will have economic uncertainty, AI-driven volatility, inflation cycles, interest rate changes, global political shifts. This creates massive long-term trends. The turtle method thrives in these cycles. While day traders get destroyed by volatility, turtle traders ride the macro trends. This gives you an unfair advantage. Chapter 19. The most important lesson, rules over feelings. Traders lose because they follow feelings. Turtle traders win because they follow rules. This method teaches you when to enter, when to exit, how much to risk, how to add positions, when to avoid trades. You do not need to think. You do not need to guess. You do not need to predict. Your job is simple. Follow the system. Stay disciplined. Remove emotions. Do this, and you instantly outperform 90% of traders. Chapter 20. Final message, the turtle mindset for 2026. The turtle method is more than a strategy. It is a mindset, a philosophy, a discipline model. It teaches you patience, clarity, structure, risk control, emotionless execution. This is how you beat day traders and swing traders in 2026. Not through speed, not through prediction, not through emotional gambling, but through rules, discipline, and calmness. This is Mr. Trading Lab, where trading becomes simple, where knowledge becomes your weapon, where consistency becomes your identity. Thank you for watching. Master the turtle method. Apply it with discipline. Trade with clarity. And remember, a patient trader is a profitable trader.